Hello everyone, welcome back to EduTap. So today, finally the most awaited marathon IFSCA Grade A Phase 2. Many people were demanding it, so we have started marathons for IFSCA Grade A also. Do let me know in the chat box if I am visible and is my screen visible to all of you. Please let me know in the chat box. Yes, hello Nilesh. Please let me know in the chat box if my screen is visible to all of you and is my voice completely perfectly fine. Please let me know in the chat box fatafat so that we can start with our action oriented workshop related to IFSCA Grade A. Clear? Only one student is replying. Yes, everything is fine. So let's start. So from today onwards we are doing our IFSCA Grade A marathon. In this particular marathon we will try to cover the subjects related to capital market, banking and bullion market. Okay. In total there are 90 questions which we will solve today, and these 90 questions will help you to revise almost all the relevant topics which are required to become an officer at the IFSCA. Now mind you my friend, this marathon is a kind of a revision. Over here I will be discussing all the important topics and I will not invest too much of my time in one question. Okay, so we have 90 minutes. We will discuss a lot. In 3 hours from coming now from 12 to 3, we will have a good collection of questions and we will discuss multiple things. Okay, in capital market we will talk regarding bonds, we will talk regarding equities, we will talk regarding debt market, and we will talk regarding what other components of primary and secondary market are. In banking, we will talk regarding the banking regulator, which is like RBI, what are different types of banks which are working in India, what is the overall banking system, what is the risk management tools like the Basel norms and everything else. In bullion market, we will talk regarding bullion exchanges, like we have IIBX, which is Indian International Bullion Exchange. We will also talk regarding, I would say, certain bullion schemes like sovereign gold bond scheme and gold monetization scheme of 2015. So there is a lot to discuss, but once you start this particular marathon, please be participative. Do not just watch my face. Please participate in the chat box. Whenever I ask you a counter question, try to reply it. Okay, some questions are easy, some questions are tough, some questions are moderate. Okay, on that note, let's start now. And yes, if you are new to our YouTube, or if you are new to our YouTube channel, then please subscribe to it. And PDF of this particular class will be available on the Telegram channel of EduTap. The link is given in the description box below. Okay, PDF will be uploaded in 24 hours. By tomorrow 12 noon you will be able to see the PDF also. Let's start with first question, which is comparatively easier one. So initial 10 questions I have kept easy because to attract the students simply. Okay, so question number 1 is on your screen. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or a governmental. Bonds are issued by companies, municipalities, states and sovereign governments to finance projects and operations. A bond is a type of what? A bond is a type of what? See, we definitely know that bond is a kind of a borrowing. Bond is a kind of a borrowing which a company makes. Okay, and this borrowing is happening from whom? This borrowing is happening from a general public. So today if Reliance wants to arrange some money, they can go towards a bank also, but a bank will charge multiple things, like they will collect multiple paperworks and all not. So a Reliance can go toward general public and do a borrowing, and whenever someone borrows, that is an example of debt instrument. That is an example of debt instrument. So answer will be option number A only. Bond, loans, debentures. Okay, all these are different debt instruments via which company raises money, via which company borrows from the general public. One more thing before I move ahead. What does an interest, or what I would say, let me frame this question correctly. The interest which company pays on bond creates a charge against profit, or does it creates appropriation of profit? Tell me how long will be the class? Minimum of 3 hours. Minimum of 3 hours. Okay, tell me, the interest which the company pays on bond creates a charge or it's the appropriation? The right answer will be charge, because charge is like compulsory. even if the company is in profit, even in the company is in losses. What amount of profit and losses company is having, the interest on the bond has to be paid. The interest on the bond has to be paid. Okay. Appropriation basically means that if you are in losses, then in that year you can skip the payment, but that is not the case with bond. The interest on bond has to be paid regularly. That's it for question number 1. I hope you enjoyed the explanation as well. Now let's move to question number 2. Question number 2 is on your screen now. A bond is a type of a debt instrument. Generally, when bond prices goes up, the yield goes down and vice versa. But when bond prices go down, what movement will be seen in the interest rate? Now this question is like flagship question of SEBI exam, RBI exam, IFSC exam, जहाँ finance आता है, right? So now try to answer this. Question number 2. There are 3 basic relationships in the bond chapter. Now currently we do not have full amount of day, we do not have luxury of time, so I will just write the relationships. If you want to see the explanation, then please write in the chat box, I will explain. Okay, the first is that bond prices, and whenever I say bond prices, I am referring to the current market prices, not the face value of the bond. Bond prices is negatively correlated to the yields. Bond prices is negatively correlated to the interest rate, but interest rate offered by the bonds and the yield are positively correlated. Just remember these 3 relationships. These are very, very important for the bonds chapter. Now the question says, when the bond prices go down, what will be the movement seen in interest rate? Interest rate के साथ negative relationship होता है, right? So when the bond prices are going down, interest rate will moves up. Interest rate will move up, right? So answer will be option number D. Yes, good. Interest rates will rise. Therefore the answer will be D. Very good. Very good. Inverse relationship or negative correlation, whatever term you want to use, you can use it over here, right? So this was our question number 2. Now see, somebody will ask me, sir, that why we are studying finance related chapter. Bond is the part of your capital market. Bond is the part of your capital market, and capital market सीधा IFSC के syllabus में भी है. So even if you see the syllabus of IFSC, they have mentioned capital market, so you will have to do bonds also. चलिए question number 3 today. Question number 3. Identify the types of bond wherein no coupon payments are made, but instead these types of bond are issued by a considerable discount to the par value, which leads to a capital appreciation. Tell me the answer for question number 3. Those types of bond wherein no coupon payments are made, but instead these bonds pays you considerable discount. The answer will be perpetual bond, console bond, subordinate bonds, or superior bond. If your answer is option number E, which is a zero coupon bond, then you are going on the right track. The answer will be zero coupon bond. Perpetual bond is that particular bond which has no maturity defined. Perpetual bond is like everlasting. It will just last. It will never end, because it's perpetual bond. Okay, perpetual bond में maturity is not defined. Console is a kind of a perpetual bond only. Console and perps, like these are synonyms of perpetual bonds. Subordinate bonds and superior bond, these are defined in the terms of repayment. When the company has to pay back the bonds, first the bond which company will pay is a superior bond, and then company will pay subordinate bonds. So superior bonds are given a kind of an authority. They are given a kind of a, I would say, what priority in the terms of repayment. So first number किसका आएगा? Superior का, and then subordinate का. You might have also heard about callable bonds and puttable bonds. These are also very famous. Callable bonds gives the power to the company to call the bond back before its maturity. Puttable bond gives the power to the investor to sell the bond back to the company. Okay, now my question to you is, tell me that particular type of bond, tell me that particular kind of bond wherein there are multiple maturities. I hope you know about this. There are multiple maturities of this particular bond. Tell me that particular kind of bond which has multiple maturities. Let's see how many of you were saying that, sir, IFSC marathons are needed. Let's see how many of you are able to answer this. Yes, this is known as my multiple maturities. Multiple maturities is your serial bond. Opposite of serial bond is your term bond. Okay, Term bond will have just one maturity, but your serial bond will have multiple maturities. It retires multiple time. Yes, good. I can see the answers in the chat box. Very good. Very good. Let's move forward now to question number 4. To question number 4. Question number 4. If an investor further invests all the coupon amounts you receive at the same rate of return as of the yield, then you will get more return. Such yield is known as what? I hope you remember the formula of yield. Yield is equals to your coupon rate divided by the current market price into 100. But if you keep investing your coupon amount and if you hold the bond till maturity, then you will come to a specific type of yield which is known as yield to maturity. Yield to maturity basically has two assumptions: that you will follow the concept of reinvestment and you will keep the maturity, you will hold the bond till maturity. If these two assumptions work, then definitely your YTM will be there. So YTM is again a kind of a parameter which tells you that what amount of return you have generated, but this is more comprehensive. Okay, so answer will be option number B, which is your YTM, which is also known as yield to maturity. Can someone see in IFSCA you only have 50 questions in your paper 2, right? So I will advise you to just practice basic numericals also. Numericals, last year there were no numericals, but this year if they have to make paper tough, they can add some numericals also. Like you can get a question how to calculate yield. This was there in SEBI paper also. Okay, this year you can see a YTM question in your, I would say, what IFSCA exam. So be prepared. Try to make sure that you do a comprehensive coverage, not a shortcut wala coverage. YTM is what? YTM formula is also very easy. YTM is equals to your coupon amount plus face value minus your current market price divided by n, and face value plus current market price divided by 2. So ये formula याद करने में कितना time लगेगा? Okay, so just remember the basic things, do not take it for granted. चलिए, here is the formula also which I have given for you. Coupon interest plus face value minus market price divided by n, whole to the divided by face value plus market price divided by 2. As simple as that. चलिए, now let's move to question number 5. Question number 5. There are various types of bonds which are issued in the financial market. In the same regard, identify the type of bond which matures multiple times over a period. This we have already discussed. This is known as your serial bond. Let's not waste our time. The answer will be serial bond. Let me recall a question which I can ask you. Let me recall a question. Tell me that particular bond which falls under the category of bonds only, but it has a maturity of, I would say less than 1 year. It has a maturity of less than 1 year. Tell me what will be that kind of bond will be known as. Like there is certain categories of government bond, if you remember it. We have already discussed it on YouTube also and on multiple classes also. Yes, very good, Rishabh. These are known as bills. These are known as bills. Okay, 1 to 10 year will be known as notes, and above 10 year is specifically referred to as bonds. And yes, $1 billion question to all the smart students. What is the more riskier in context? Like if I have bonds and if I have debentures, what is considered as more riskier out of debt and debentures? Yes, very good, Nilesh. Out of, I would say what? Out of my, I would say, bonds and debenture, what will be considered as more riskier? Yes, debentures. What is the reason why you are saying that debenture is more riskier, or why there will be higher amount of risk in debenture and not in bonds? And all this is capital market. Okay, capital market mein you have bond, you have your equity, you have your debt, you have your forex. So you have a same syllabus of RBI and SEBI over here also. So if you have prepared in RBI or in SEBI, okay, so then you can use the same explanation or the same knowledge over here also. Yes, debentures are more risky, debentures are unsecured. Yes, debentures are also issued by a private corporation, but bonds are generally issued by your central government. Tell me, if a bond is issued by a state government, a bond which is issued by a state government is known as what? A bond issued by a state government is known as what? Good. Good, Rishabh. Good, John. Good, Shruti also. Okay. A bond which is issued by a state government is known as state development loan. and a bond which is issued by a municipality is known as your Muni bonds. These are known as your Muni bonds. Okay, basic questions. I hope you would have got it correct also. So serial bonds have multiple maturities and term bond is like exactly opposite of serial. In term mein you will make a one shot payment, but in serial bond there will be multiple maturities. Let's move forward. Question number 6. Question number 6, and today there are multiple questions targeting different chapters. Okay, question number 6. Blue bonds are the financial instruments which primarily used to support projects related to. Now I hope you know that there is a concept of green bonds. Okay, RBI also issued sovereign green bonds of worth 16,000 crore, right? This was a very big news. Now in green bonds there are multiple, I would say, categories. Like we have your blue bonds, we have your yellow bonds, yellow, right? And there is one more kind of bond which is orange bond. Like all these are different kinds of bonds specific, dedicated to a specific cause. Like green bond will work for climate. Like there should be more greenery, we need to create more trees, we need to plant more trees, rather we need to create a green environment kind of stuff. Blue bonds are specific to your water bodies. For example, if my company wants to participate in Namami Gange program and I have to raise 500 crore from the general public, then I will issue blue bond. Whatever proceeds I will get from blue bond, I will use it for conservation of water management or marine sector. Right? But what is the purpose of yellow bond? Can you tell me? What is the purpose of yellow bonds? What is the purpose of yellow color bonds? Why a company might issue a yellow bond? चलिए बताइए. Why a company might issue a yellow bond? If you do not participate, then definitely I am also stubborn. I will complete entire lecture within just 1 hour. But if you all participate, then we can discuss like 500 questions in this marathon. Yes, very good. Solar energy, yes, very good. Solar energy bonds are also known as your yellow color bonds, and we have orange bonds also. Orange bonds are those bonds which are there for gender equality. Okay, so answer over here will be option number B. Okay, cool. Yes, yellow is for solar energy. Good. Now we are moving ahead to question which is appeared in the IFSCA Grade A Phase 2 exam of 2023. What is the leverage ratio of domestically systemically important banks in India? 3.5, 4%, 4.5, 5% or 5.5? Tell me what is the leverage ratio for domestic systemically important banks in India. So somebody just commented on my video, sir, that please solve the previous year questions also. So we are solving previous year questions also. See, this question has been taken from Basel committee. Okay, if you know Basel committee, which has given you multiple, I would say, norms like Basel 1, Basel 2 and Basel 3. In Basel 3 they have discussed leverage ratio. Now as per Basel committee, leverage ratio should be 3%. RBI said for normal banks in India it will be 3.5, but those who are D-SIBs in India, they will have a leverage ratio of 4%. So answer will be option number 4. Okay, don't worry, we will discuss Basel norms again because this topic is important for banking part, and banking is in our domain today, so we will cover it again. But just solving the previous year questions right now, the answer will be 4. If this question comes in my exam, if this question appears in the front of my screen, then I will not take more than 5 seconds to solve this question, because either you know the answer or either you don't know. Simple. So IFSCA Grade A Phase 2 exam is considered tough because it has wide variety of questions. Okay, so it is not tough because it is asking deep questions or it is asking multiple different alien questions. It is tough because diversity of questions over here is quite huge. Okay, question number 7 now. Question number 7. A derivative. Now bonds is done. Now we are moving to derivative. Derivative is also a component of your capital market segment only. A derivative is a risk management tool used commonly in transactions where the risk is due to an unknown failure of future value. The term derivative is used to derive a financial instruments. This is a very very easy question. If you do this wrong, then definitely something is wrong in you. Something is wrong in you as in that you have not done your studies well. This is a very easy question, and mind you, there will be easy questions. I will prove it. Don't worry. In your exam, there will be some basic halwa level questions also. This is an example of it. Yes, derivatives derive their value from the underlying asset. Underlying asset is that particular asset, or it's that particular kind of property which will give a kind of a price fluctuation to your derivative contract. If the underlying asset prices is increasing, then the value of your derivative contract will also increase, and vice versa. So there is a kind of a positive correlation. There is a kind of a positive correlation between the prices of underlying asset and your derivative contract. Okay, now my basic question to all of you is, how many categories of underlying asset can be seen in journal finance? How many categories of underlying can be seen in journal finance? Please tell me. अगर underlying asset है तो उसकी कितनी categories हो सकती है? Yes, like P notes, very good. P notes are also kind of a derivative, but not typical derivative. ऐसे तो you also have depository receipts. Depository receipts are also a kind of a thing which derives their value from a share, but we cannot call them as a typical derivative, although they are a good example of derivative. Yes, there are four types of kind of underlying asset. You have your currency, you have your interest rate, you have your equities, which includes your, I would say, stocks, okay, or the shares, and you also have your, one more was left, commodities. Commodities as in like potatoes, as in like your cotton and everything. And in your, I would say, IFSCA Grade A syllabus, there is one specific topic also, spot and derivative market related to commodities. So that also we will cover today. Okay, so today I am covering first capital, then banking, and then bullion related stuff. So abhi capital chal raha hai. So these are your four types of, I would say, four types of underlying asset. Let's move forward now. 7th C is the answer. 8th one. Let's see who gives me the right answer for 8. There is a risk in the over-the-counter derivatives because the party which is in loss might disagree to honor the contract. Such type of risk is categorized as what? Market risk, interest rate risk, counterparty risk, legal risk, or compliance risk. I hope you know that we have multiple types of derivatives too. We have your futures, we have your forwards, we have your options, we have your swaps as well. Out of these four, swaps and your forwards are traded on what? They are traded on OTC. OTC means a kind of a different market altogether. It's like a kind of a private agreement. But when it comes to your futures and when it comes to your options, these are traded on exchange. Therefore, they are also known as exchange traded derivatives contract, ETDC. Exchange traded derivatives contract. So what will be the answer? Yes, these are known as this risk of defaulting by someone is known as counterparty risk. Okay, market risk is also known as price risk. Price risk as in that prices can go up and prices can come down anyhow, like they can shift. Right, interest rate risk is associated to the movement of interest rate. Like if the movement of interest rate is too much wild, it is fluctuating, then definitely multiple things will be affected. Counterparty risk is basically associated to the another party. Like if I am a buyer, then seller can cheat me. If I am a seller, then buyer can cheat me. Legal risk, like you are you can have any kind of legislature, you can have any kind of changes in law. Compliance risk is that you are not following the laws of that particular land. Okay, so that was question number 8. Now let's move to 9th one. Dash bonds are rupee denominated bonds. A very very good question, I would say. A very popular concept is discussed via this question. Dash bonds are rupee denominated bonds. Perpetual, zero coupon, speculative, none of the above, or masala. Dash bonds are kind of rupee denominated bonds. Yes, your answer will be option number C, which is masala bonds. Masala bonds are issued in foreign countries, but they are Indian rupees denominated. Even if you see the explanation, masala bonds are rupee denominated bonds issued outside India by the Indian entities. And yes, if I'm not wrong, International Finance Corporation issued these bonds to collect certain amount of money. And why the term masala was used? Because masala is representing the cuisine of India. Like we are very rich in masalas, right? We have red, we have green, we have black masalas and whatnot. So that is like showing the culture of India. You would have also heard about treasuries. Treasuries is the term which is used for US related securities, United States. Okay, we have oats also. Oats is a term which is, if I'm not wrong, used for France, right? We have bunds. Bunds are used for Germans. Okay, so likewise there is a nomenclature which is used by different countries, like samurai bonds for Japan, if I'm not wrong. Okay, panda bonds for China. So these are different nomenclature. For our dear India, it's our masala bonds. Let's move forward to question number 10. Question number 10. Identify the individuals who bets on the derivative market based on his or her views of the potential. He is actually not interested in buying or selling shares, but actually carries out the trade in anticipation of profit. These are the types of people. These are known as what? Hedgers, arbitrators, profit makers, speculators, or none of the above. The answer will be option number D, speculators. Speculators are those people who always say that risk hai to ishq hai. They accept more and more risk. They always go with the momentum. They are like, yes, I will try to either hit a profit or either I will try to hit losses, but I need to do something big in my life. So these are people who loves risk. Hedgers are completely opposite. Hedgers are those people who always want to avoid risk. Hedgers are those people who always want to avoid risk. They always want to play safe. They always want to play safe. Arbitrators are those people who will buy and sell in different market. Like एक market से buy किया, दूसरे market में जाके बेच दिया, to earn a risk-free profit. For example, if I bought at BSC, I will go and sell at NSC. So this is like risk-free profit. Okay, but the chances of risk-free profit are very less in these days. Profit makers are a term which is associated generally only. There is no specific category for profit makers. Okay, let's move to question number 11 now. Question number 11 on your screen. As a price increases, the profit of the buyer increases. Okay, and losses of the seller increases once the price increases. Which price we are talking about? We are talking regarding the current market price. In derivative, there is a thumb rule. If current market price is increasing, then your buyer is in profit. Okay, and if current market prices keeps on increasing, buyer ka profit will keep on increasing, but seller will be in losses, because derivative is a zero sum game. Zero sum game means what? That if one party wins, another party will lose. If another party loses, the another party will win. So there is always like plus and minus, no plus plus, no minus minus. Okay, and yes, if current market prices reduces, then your buyer is in losses and your seller will be in profit. So this is like a fundamental rule. In my live classes and in my course also, we have discussed a lot about this. But in marathon, I can just tell you the important stuff. But yes, you have the full right as a student to ask once you are not able to understand the concept. Okay? Yes, what will be the answer? The profit and loss in futures contract is also known as what? It is also known as payoff. It is also known as payoff. Let's do some discussion. We are almost like 10% of the class is finished. So let's do some discussion. Okay, please be participative. I will ask you only, because the marathon is for you. If I draw something like this is my graph. These are the two graphs which I am drawing for you, and this I have asked multiple times on YouTube. Let's see how many of you are able to answer it correctly. On x-axis I am taking my current market prices, on y-axis I am taking the profit. Same for two different graphs. Okay, profit and current market prices. Now if I draw a upward sloping curve, if I draw an upward sloping curve and if I draw a downward sloping curve, tell me if I am using this graph is x, this graph is, let's call it graph A, and this graph is graph B. Tell me which particular graph will denote buyer side. Which particular graph will denote buyer side? Which particular which particular graph, not draft, which particular graph will denote buyer side? Graph A or graph B? फटाफट participate करो and number will decrease. Like once I ask these questions, people will leave the class. बताइए, graph A or graph B? Let's see who answers this correctly. Requesting your participation. Please participate. Yes, graph number A is of buyer and graph number B is for seller. Good. Why buyer? Because whenever the current market prices increases, the buyer profit will also increase. So this is what the denotion of upward cupping slope is all about. Now, this is what you have to identify over here. And yes, do remember, in your forwards and in your future, we always have a linear payoff curve. Linear payoff curve as in that the profits and losses are unlimited. Profit and losses are unlimited. Upward sloping is for buyer, downward sloping is for seller. Okay, one more thing. Let's try to also see the differences between forwards and futures also. Okay, so I'm just writing. I'm not asking you because that will waste a lot of time, but you have to revise with me. First, what is traded on exchange? We already know that future is traded on exchange, forward is not traded on exchange. Okay, second thing, what is more I would say regulated. Regulated as in rules and regulations will be followed in which particular contract. Your answer should be futures, because over here there is a regulator named SEBI, Securities and Exchange Board of India, and in forwards you do not have any specific regulator. Therefore the risk is low in forwards, risk is low in futures and risk is high in forward. Which risk? Counterparty risk, like the other party can default. Then you also have multiple other points like the price discovery. Price discovery will be highest in futures, lowest in forwards. Why? Because of liquidity. Liquidity is again higher in forward and it is lower in your forwards. Okay, so all these points are as good as gold. You can get a question from it because this all is from your financial markets only. Let's move forward to question number 12 now. Chaliye, try to identify the answer of question number 12. Identify the agreement wherein the agreement takes place between two parties to exchange sequence of cash flow over a set period of time. Usually at the time of contract is initiated, at least one of these cash flow is determined by a random uncertain variable such as interest rate or foreign exchange rate. These are known as options, future, forward. None of the above are swaps. Yes, your correct answer will be swaps because there is a sequence of cash flow. In swaps you pay something and you receive something, right? So this is a cash flow. This is a cash flow, or there is a kind of a swap which is happening. Now swaps generally are of two type, interest rate swaps and you have your currency swaps. Yes, these are the two journal type, but you also have credit default swaps. Multiple other types of swaps are also there, but just read about these two because these two are very famous. Interest rate swaps mean you exchange the interest rate based payments based on notional capital, right? One party pays fixed, another party receives floating, something like this. In currency you exchange the currencies plus the principal payment associated to it, so you change the total value also and the interest also based on that. Okay, let's move forward to question number 13 now. Question number 13, let's see who gives me the right answer for 13. When one enter into the options contract, one needs to pay only 16 or 20% as an upfront money to enter into the contract. This partial payment is known as what? This partial payment is called as what? This partial payment is known as what? Is this known as upfront money? Is this known as partial money? Is this more known as less money or margin money or payment in kind? Yes, this my friend is known as your margin money. Margin is the amount of money which you are depositing to enter into the trade. Okay, for example, if the trade is of rupees 100, I can enter into the trade by paying rupees 10 only. So this amount will be known as what? Margin. Okay, and margin are of two type. Basically you have your initial margin and your maintenance margin too. Initial margin, the initial amount of money which you are depositing. Maintenance margin is the lowest amount of money which you need to maintain in your account. Once your account balance hits to the lowest level, you will be made a margin call. Securities or your broker or your exchange will make a margin call. And what is the formula to calculate the price at which margin call will be made? Initial purchase price into 1 minus initial margin, 1 minus maintenance margin. Very famous formula in the world of finance. Let's move forward to question number 14 now. Try to identify question number 14. Yes, there is extreme loss margin also. There is PAN also. So there are multiple types of margin, but generally again initial and maintenance margin are very popular. Question number 14 now. Let's see who gives me the right answer for 14. Identify the type of an option contract where the options contract gives the owner the right but not an obligation to sell the specific amount of underlying security at a specific price within a specific time. Buyer of this contract believes that the price of the share will decrease over time. So once you are decreasing, the buyer is having a kind of a perception that the prices will decrease, and this is only seen in put option. Therefore the answer will be put. Double-sided option, embedded options, these are not there in your syllabus. Call and put you should remember. Call option is basically that particular option in which buyers expects prices to increase, and in put option the buyer expects the prices to decrease. In option, buyer is also known as the holder. Okay, likewise seller is also known as what? Writer. Seller is also known as writer. Okay, and yes, I hope you remember that buyer pays a premium. Buyer pays a premium to a writer or to a seller, right? So multiple things I hope you would have revised. But can I say that in option payoff graph, let's see who answers this correctly. In option payoff graph, will it be linear or will it be non-linear? You only tell me. Will it be linear or will it be non-linear? Will it be linear or will it be non-linear? Option payoff graph. Futures and forwards have linear payoff. But what about options? Tell me. Linear होगा या non-linear होगा? Let's see. Aman is saying linear. Okay. What about others? Let's see who gives me the right answer. One student is saying linear. John is saying non-linear. What about others? What about others? Rohan is also saying non-linear. Shruti is also saying non-linear. Rishabh is saying non-linear, I think. Yes, because over here you will have non-linear, not linear. Because linear basically means unlimited profits, unlimited losses, which is the case in your futures and in your forwards. But in the case of, I would say, options, in the case of options, one party will have limited profits and one party will have unlimited thing. So over here you have unlinear, non-linear I mean. Non-linear means not a straight line, rather it's a kind of a bent line. Simple. Okay, so answer will be non-linear for payoff of options. Okay, chaliye, now let's move forward to question number, I would say, 15. Now we are moving towards equity market. So we have done bonds, we have done our derivatives too. Now we are moving to question number 15. Question number 15. DRs are the financial instruments, but DRs are listed on the stock exchanges of USA. Then it will be known as what? Now multiple types of DRs are there, but three again are very, very popular. You have ADR, you have your GDR, you have your IDR. ADR is your American Depository Receipt, GDR is your Global Depository Receipts, IDR is your Indian Depository Receipts. And what is a depository receipt? Depository receipt is basically you are converting your share into a DR. Why? Because in India cross listing is not allowed. You can list in India, but you cannot list in America. You can only list at one particular place. So companies do what? They convert their share into a DR, and this DR will be listed in America or in some other part of India like Germany or in Nepal or in Pakistan, something like that. Okay. So please discuss SEBI phase 2 questions too. Okay, we will try to do it. Yes, the answer will be ADR, because ADR stands for what? American Depository Receipt. And if they are listing in USA, it means that they are listed in America only. So they will be known as ADR. Okay. Tell me, will you get dividend on depository receipts? Will you get dividend on depository receipts? Yes or no? Will you get dividend on depository receipts? Will you get dividend on depository receipts? Yes or no? And will you get any voting rights in depository receipts? Tell me. आज ही बताना है. Yes, you get dividend in your, but you do not get the voting rights. Okay, so you cannot take part in the management, but still company can give you the dividends. Okay, चलिए. Now let's move to question number 16. A question which I have taken from your capital market segment. Which securities can individual invest under under retail direct scheme. Now retail direct scheme was very much in news, so they have asked a current related topic, but this is a very easy question, I would say. Which securities an individual can invest under retail direct? Retail direct के अंदर you can invest in all the maximum of the government securities, right? In all the government securities. So Government of India Treasury Bill is a government security. SDL government, sovereign gold bond government, Government of India dated G6 again securities. So answer over here will be option number E. Now this is your IFSCA phase 2 2023 phase 2 questions. Okay, so this was the level, and again we are not over here to comment on the level, rather we have to just check our preparation. Let's move to 16 now. Let's move to 16. In the stock market, identify the kind of a special public offer which is used by the companies to provide stability to the price of the share in the secondary market immediately on the listing of the shares. Cohesive, stability, green shoe, yellow shoe, or control options. Yes, gilt, retail direct gilt account. The full name of that is retail direct gilt account. Good, Rishabh. Chaliye, tell me the answer for 16. Once the prices are collapsing after IPO, company can opt for green shoe option. Tell me, green shoe option can be, it can remain active for how many days? First to ye batao. Options are 10, 30, 40, 60 or 80 days. Tell me, it will be active for how many days? Green shoe option can be active for how many days? Post the IPO, obviously. Yes, it will be only be active for 30 days. Very good. It will only be activated. And when it comes to the allocation of shares to an extent 15% can be done over and above your limit. Okay, so this 15% has to be done in 30 days only. After 30 days, green shoe option is kind of over. Okay, let's move forward now. So this was your question number 16. Now we are going towards 17. Chaliye, the question is on your front of your screen. Try to answer it. The anchor investor would be qualified institutional buyer, and the issuer can allot dash percent up to what percent of quota of QIB to anchor investors. Anchor investors are those investors which are having a big name. They are definitely having a big name in the financial sector. So tell me, anchor investors will have what percent of QIB? Now if you see, once you follow the profitability route which many companies follow in India also, we have multiple types of investors, but the three categories for an IPO investors will be your, I would say, what, retail investors, non-institutional investors, and your QIB. QIB को 50% allocate करना है, retail को 35 करना है, NIIs को we have to allocate 15%, right? Out of this 50%, 60% has to be allocated to anchor investors. So anchor investor is a kind of a QIB only. So answer over here will be option number C. Just a minute. The anchor investor will be qualified institutional buyer. What issuer? The anchor investor would be qualified institutional buyer, and issuer can allot up to what percent of quota of QIBs? So answer will be 60, right? Let me check. Yes, it will be 60. Why you are saying 50-50? The quota of anchor investor was asked. The quota of anchor investor will be 60% of QIB, right? Or basically you can say 60% of the 50% of QIB. For example, if I am coming with 100 crore का IPO, my company is coming with 100 crore. इस 100 crore का 50% has to be allocated to QIB. So कितना QIB से लेना है अपने को? 50 crore. But इस 50 crore का 60%, which will be 30 crores. 50 का 60%, right? 5 6 30. So you will allocate 30 crore to anchor investors, or 20 crore can be allocated to non-anchor investors. Simple. So answer will be over here 60%. This concept is bit confusing. No, this is very easy. Okay. So answer will be 60%. And anchor investor minimum has to invest how much crores of rupees? Tell me. An anchor investor has to minimum invest how much crores of rupee so that he can be classified as an anchor investor? Tell me. An anchor investor has to invest what total amount of money to be qualified as an anchor investor? 5 crores, 16 crores, 100 crores, or what? Who are non-anchor? Non-anchor is that particular person who is a QIB, like a mutual fund. A mutual fund can be a non-anchor if they are investing 5 crores of rupees. Simple. Yes, 10 crores or more. 10 crores or more. Simple. Chaliye, now let's move forward. The answer will be C over here. Okay. Let's move forward to question number 18 now. Again, based on profitability route. What percent of shares can be allocated to non-institutional investors? Okay, 15% is for them, 35 is for retail. What percent can be allocated to QIB? This we have already solved, it will be 50%. Right, so answer will be option number D. Let's not waste our time, this was easy. Question number 19 now. Question number 19. Question number 19, I am waiting for your answers of 19. And yes, also answer this question for me. Separation of ownership and trading rights is known as what? And the concept of finance, in the concept of finance, the separation of ownership from the trading rights is known as what? Tell me what will be your answer. Napoleon 50. 50, Nifty 50 is your national 50, which is an index of 50 shares. Right, and if I'm not wrong, Reliance has the highest share based on their market capitalization. Now tell me the separation of ownership and the trading right is known as what? Sensex is for BSC. Sensex stands for your sensitivity index, which is a kind of an index following performance of 30 shares. Tell me separation of ownership and trading rights is known as what? Hello. This is known as demutualization. Demutualization. Okay, like for example, BSC was formed in which year? 1875, right? This was the oldest stock exchange of Asia, if you see. NSE came way after BSC. NSE was in 1992, if I'm not wrong. Okay, now what is demutualization? That you will distribute the ownership to multiple, I would say, shareholders, because there should be multiple owners and there should be minimum, I would say, what? Minimum managers who are running the company. So there has to be a difference. Okay, so let's move forward. This was question number 19. We have debated a lot on this. Question number 20 now. Every now and this question is asked in your exam. Be it SEBI, be it IFSC, be it RBI. Whenever they are asking you capital market segment, this question is like Sadabahar question, evergreen question. So try to answer question number 20 also. Question number 20. How many depositories are there in India for present? How many depositories are there? 4. B or E? (20th B). Yes, there are 2 depositories only. If you see, you have your NSDL, National Securities Depository Limited, and your CDSL, Central Depository Services Limited. NSDL act as a depository for all the trades which are happening on NSE. CDSL act as a depository for all the trades which is happening on BSC. This you also have to remember. Okay. Yes, NSDL, CDSL. Now let's move forward to question number 21. A very basic question. I hope you will all be able to answer it. Now this is also a very easy question. If you are not able to answer this, then definitely your revision is lacking. Stock of large companies having a good business model can generate long-term profit is known as what? Blue chip companies, blue shark companies, blue shade companies, or blue market companies? Yes, CDSL is the largest, because simply because on BSC multiple I would say what companies are there. So CDSL has to maintain a lot of things, and CDSL is also publicly listed. CDSL is publicly listed. You can buy shares of CDSL. Yes, IFSC में भी डिपॉजिटरी है. But IFSC is not your stock exchange, that's your bullion, right? So bullion is different. Bullion is a commodity market. ऐसे तो depository आप देखो MCX में भी है, multi commodity exchange में. But the question was regarding stock depositories. Question number 21. And in the end we will also discuss regarding IIBX, which is like a very hot topic for your exam. Stocks of large company. Yes, that is also good. These are known as blue chip companies. Blue chip companies are like very big companies which are working in India. Okay. Let's move forward now. Question number 22. चलिए, question number 22. Question number 22 is from your debt market. So by and large we have also finished your equity market. We have revised the important points. But in equity market you should know that what is a preference share, what is an equity share, what is right issue, what is bonus issue, all those stuff you should remember. Okay, in marathon we just try to recall important stuff, but we cannot do everything in marathon, right? That is the disadvantage of marathon, but still it's a good platform to revise all the important stuff. But preference shares, equity shares, different types of preference shares, section 55 of Companies Act, and you have your types of preference shares, you have your rights issue, bonus issue, ESOPs and whatnot. There is a like equity market is like a different world altogether. So debt market now. What should be minimum amount for deposit of debt of certificate of deposit? It has to be 5 lakh. But tell me, out of certificate of deposit, what is the minimum and maximum number of days? Minimum and maximum number of days. In certificate of deposit, what is the minimum and maximum number of days? Tell me. Yes, minimum will be your 7 days to maximum 1 year. Okay, and COD is issued by generally banks in India, and also over here the minimum amount is 5 lakh. Okay, we also have commercial paper. Commercial paper minimum amount is what? Socho, batao, 5 lakh, right? Commercial paper again can be issued for 7 days to 1 year. Moreover, certificate of deposit, this is for bank. A bank can issue a certificate of deposit from 7 days to 1 year. But if an all India financial institution like NABARD is issuing a certificate of deposit, then it can be issued from 1 to 3 year also. Okay. So this also you have to remember. Commercial paper again 5 lakh. Okay. Good. So answer will be option number D. Let's move forward to question number 23, again taken from your debt markets. Try to answer it. Identify the incorrect statement from below. T-bills are the money market instruments offered to finance short-term debt implementation. T-bills are of 3 types. T-bills are purchased for a price. T-bills are zero coupon securities. 1 is minimum, 3 is maximum for all India financial institutions. So 1 to 3 years. Okay, 1 to 3 years for all India financial institutions. But for normal banks, it is like 7 days to 1 year. 7 days is minimum, maximum is 1 year. Question number 23 now. Yes, which of the following is incorrect? Statement B, because 172 nahi hoga, 182 hoga. Okay, it will be 182 days. Good. Tell me is it true or false? Ad hoc T-bills are still continued in India. Ad hoc T-bills are still used in India. The answer will be no, because ad hoc T-bills and your on-tap T-bills were discontinued from the year 1997. Then what was the replacement of all these different T-bills which were revoked? Then now today RBI is using auction T-bills. Okay, today's RBI is using auction T-bills. Remember it. Chaliye, and what is the minimum amount to be deposited in a T-bill? What is the minimum deposit amount for T-bill? What is the minimum amount to be deposited in T-bill? 10,000, 25,000, 50,000 or 60,000? Yes, it has to be 10,000. And yes, somebody is writing CMB. CMB is a kind of a debt security only, but it is for less than 91 days. T-bill starts from 91 days to 182 to 364. Simple. Chaliye, now let's move to next question. This statement is very easy. T-bills are zero coupon because you do not get interest on it. T-bill will be issued to you on, I would say what, discount. It will be issued to you on discount. Right. Let's move forward to question number, I would say what, 24 now. What is the minimum rating required to issue a T-bill? Required to issue a commercial paper rather, not T-bill. Required to issue a commercial paper in India. Yes, good. 10k, 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 10,000, 10,000, good. For a commercial paper to be issued in India, what is the minimum credit rating? Now in commercial paper, there are two figures which you should remember, net worth and turnover. If your net worth of the company is above 4 crore, then only you can issue a T-bill along with turnover condition. Turnover has to be more than 100 crore. Okay, turnover has to be more than 100 crores. So these are the two conditions for issuing a T-bill. Answer will be option number 3. Yes, that is A3, because under your option number C, which is your option number 3, A3 is the minimum credit rating which you need to have so that you can proceed ahead towards issuing of, I would say what, commercial paper. Okay, and is commercial paper secured or unsecured? Is commercial paper secured or unsecured? Commercial paper is secured or unsecured? Commercial paper is secured or unsecured? Yes, commercial paper are your unsecured. Therefore, they carry a higher amount of risk also. Chaliye. Now let's move forward to question number. One more question which I am taking from IFSCA paper is, which of the following act is not under the purview of Reserve Bank of India? Banking Regulation, Reserve Bank of India, Payment and Settlement, and your Negotiation Instruments Act of 1881, or is it your Insolvency and Bankruptcy Code of 2016? Good. Everybody is saying unsecured. Rohan, Chetan, Shruti, Ashutosh, Sujit, John, Krishna. Which of the following act is not under the purview of, I would say what? Yes, Insolvency and Bankruptcy Code. Reserve Banking Regulation under, if I am not wrong, under section 22 of Banking Regulation Act, RBI distributes the licenses to the banks, right? Section 22 of Reserve Bank of India is associated to currency printing and currency management. Payment and Settlement Act, section number 7, if I am not wrong, RBI has the power to grant the licenses to the industry for operating payment and settlement system. Negotiable Instrument Act of 1881, under this RBI announces holidays also. Insolvency and Bankruptcy Code largely is not related to RBI, although certain functions are given, but it is not under the purview of RBI. Okay. Yes. Question number 15. Sorry. Question number 25. As per the present SEBI norms, the minimum subscription in a public issue for debt securities is specified at what percent of the base issue size? 75%. Good. So if you are issuing bonds, bond is a kind of a debt security, and if you are getting 100 crore ka bonds, then you need to get 75 crore at least. But if I change the quotient to equity, then your answer will be, in that case your answer will be, if I change the term equity, then in equity what is the minimum subscription which is needed? Yes, in that case it will be 90%. Okay, good. Chaliye, question number 25 also finished. 26 now. Try to find the difference between call money and notice money market. Question number 26. Which of the following statement accurately describes the difference between call money and notice money? Call money is borrowed and without no notice period, while notice money requires 1 day notice. Call money is typically used for overnight needs, while notice money is used for period of 2 to 14 days. Call money is used for overnights, while notice is for 5 to 14. Money is typically used for 2 to 14. All money, while notice is used for period between 2 to 14 years. Baap re baap. Years nahi hona chahiye. So answer will be option number B. We have call, we have notice, and we also have one more type of market. Can you name that particular market? We have call, in which securities are of less than 1 day. More than 1 day, which is like 2 se leke 14 days tak, you have your notice. And above 14 is known as what? Up to max 1 year, it is known as what? Somebody in the chat box, please tell me. Above 14 to 1 year, it is known as your term money. Very good. It is known as your term money. So these are different types of call money market. These are different types of call money market. Let's move forward to question number 27. Basel framework. Basel Framework Committee introduced how many pillars? Now Basel Committee of Banking Supervision. Basel Committee of Banking Supervision announced Basel II in the year 2004. But this pillar came with how many pillars? Or this norm came with how many pillars? Tell me. Options are 1, 2, 4 and 5 or none of the above. 5. Sujit is going with 2. C. The answer will be 3. Therefore, the answer will be none of the above. There were 3 pillars which were announced in Basel II. First pillar was your related to capital adequacy ratio. Tell me the capital adequacy ratio of RBI and as per Basel Committee. Then you also have your capital adequacy ratio, market discipline and your transparency. So these are the 3 pillars which are introduced additionally by the Basel Committee. Okay. So answer will be 3. So answer over here will be none of the above. Okay. Capital adequacy ratio as per RBI has to be maintained at 9% and the Basel Committee suggested that it should be maintained at, I would say, what, 8%. So 1% extra by the RBI. Chaliye, question number 27 is E. So we have done this. Now let's move to 28. 28. Yes, very good, Avinash. Sorry. Question number 28. What do the terms bullion and bearish signify in the financial markets? What do the terms signify in the financial markets? Bullish, bearish. Bullish is kind of expecting that the prices will increase. Bearish expects that the prices will decrease. So just read and find the correct one. The answer will be option number B only, because bearish expects the market to go down, bullish expects it will go up. Good. Chaliye, question number 29. Now we are shifting our focus towards banking also. So let's see who answers me correctly for 29. चलिए बताइए 29. Yes, there are multiple types of ATM. Like pink label ATM is exclusively for usage of women's. Yellow ATM is, if I'm not wrong, this is related to e-commerce. Okay. White label ATM is like owned by completely private entity. Mobile ATM is like you can shift. Now there is also brown label ATM. Brown label ATM is which that a bank and a party, they both collaborate and they open an ATM. Bank will make sure that money is loaded into the ATM. Private company will make sure maintenance things and everything. So that is known as brown label. But over here the answer will be white label ATM. Good. Chaliye. Now let's move to 30th one. Now we are on the 30th one. If a company has a good brand name but does not have a capital to expend, then it can use what? Leasing, factoring, franchising, forfeiting, or none of the above. Leasing is generally used to take a machine or to take a very heavy asset on rent. It's like you are taking an asset but you are calling it as rent. Okay, you are calling it as leasing. Factoring is to make sure that you are able to convert your bill receivable into cash. You are able to convert your debtors. You are able to convert your, I would say, bill receivable into cash very quickly. Franchising and forfeiting. The answer will be franchising, because in franchising you can expand your business by having a good brand name. Like McDonald's is using franchising in India. So answer will be option number C. Good. Question number 31 now. Question number 31. Identify the type of risk which arises due to possibility of a major bank falling and resulting into the losses of reverberating into the banking crisis. C. Systemic or liquidity or market risk. What will be your final answer? Yes, it is known as a systemic risk. Systemic risk basically means that if one party falls down, then another party will also fall down. So that's a kind of a domino effect which will happen. एक गिरा तो बाकी सारे भी गिरेंगे. Today if LIC collapses, LIC collapse will send shock waves to multiple banking people, to multiple insurance people. So that's like systemic risk. Okay. Systematic risk. Systematic is different. Systemic is different. Systematic is like it is there, always there. Like for example, a COVID can come again. I hope it doesn't, but if it comes, then many people will be facing systematic risk. Systemic is like if one body collapses, then another body will also collapse. Okay. Yes, systematic is whole market. Good. Question number 32 now. Question number 32. Question number 32. Question number 32. Answer it correctly, please. Let's see who answers this correctly. 1 USD changes from 70 to 75. If you see, USD previously was 1 USD value was 70, but now 1 USD value is 75. So it basically means what? It basically means that the value of your currency has depreciated. Why? Because previously you can buy one USD with $70. Now you need 75. So the value of Indian rupee has depreciated and the value of foreign currency has appreciated. Why foreign currency is appreciated? Because previously they can buy 70 rupees with $1. Now they can buy 75. So they can buy more amount of rupees from the same dollar. So it basically means that the value of dollar has appreciated and the value of rupee has depreciated. So both are correct. Therefore the answer will be option number E. Agreed? The answer will be option number E. Cool? Answer will be option number E. Good. चलिए, now let's move to question number 33. Try to answer question number 33. These all are banking related questions, and if you are following the news related to foreign exchange reserves, can you let me know that there was a historic moment? I think yesterday only or day before yesterday, there was one historic moment. What was that? Can you tell me about that particular historic moment? Recently our foreign exchange reserves crossed a milestone. I hope you know it, right? What was that? What is the historic milestone? You need to write in the chat box. I am seeing your chat. Tell me what will be that particular milestone which we have reached. Tell me. What? Yes, 700 billion USD is the correct one. Yes, right. So answer will be that yes, over here you do not have to tell me the value, rather you have to tell me that what is not the component. So answer will be option number E, because reserve position with IMF comes, not with World Bank. Yes, $700 billion we have crossed. Good. Yes, and if I am not wrong, India has become the 4th nation to do so. Okay, I was reading newspaper, so if my memory serves me well, India was the 4th nation to cross a limit of 700 billion. Chaliye, now let's move forward to question number 12 also. Question number 12. Question number 12. Question number 12. Anchor investors, see, this is a Sadabahar question. Anchor investor has this, anchor investor has that. You can also get a retail investor. Also, please let me know in the chat box that when it comes to the retail investors, they can invest up to what amount of money? They can invest up to what amount of money? This question we will address. But when it comes to the retail investors, what is the maximum amount they can invest up to? They can invest up to what amount of money? Anchor investors, minimum is 10 crore. Yes, for retail investors the limit is of 2 lakhs. Now, whenever we have an anchor investor, anchor investors cannot sell their shares in the lock-in period. So there is a lock-in period of 30 days. There is a lock-in period of 30 days. We already know this, right? This is the theory part which we always teaches in our classes also. Okay, but this 30 days is applicable only to the 50% of the portion. For example, I have invested, for example, I have taken the shares of Reliance 10,000. 10,000 shares I have taken. So I cannot sell these shares till 30 days. But after 30 days I can sell 50% and I can offload the entire after 90 days. Okay, so you can offload 50% up to 30 and the entire thing after 90 days. So do remember it. Okay, yes, the answer over here will be 30 and the answer of retail wala will be, I would say, what, 2 lakhs. Good. Question number 34. Question number 34 now. So we are now discussing inflation also, which is a component of your journal banking only. Yes, 90 days for next 50%. Question number 34. Deflation, stagflation or disinflation. Just discussing the basics of it. Please tell me the answer for question number 34. Question number 34, what will be the answer? Ashutosh is saying E, Rohan is saying E. One very weird name is there. That is also going with E. Nilesh E, Surjit E. A. See, deflation is opposite of inflation. Inflation means what? That the prices will increase. Deflation is opposite of it. Deflation basically means that the prices will decrease. So if you see, inflation and deflation are totally like extreme ends of the row. Okay, so deflation when there is a journal fall in the price level. So 1B is correct. Okay, 1 ka B. Disinflation is the fall in the reduction in the rate of inflation. Okay, so disinflation means inflation is there, but now it is not that much. Previously the prices were increasing by 5%, but now they have increased by 3%, now 1%. So this is inflation happening, but the rate of reduction with inflation happening was reducing, right? So disinflation is a reduction in the rate of inflation. Deflation is this. Stagflation is that particular situation when your inflation is also high and when your, I would say, unemployment is also high. Okay, so if you see, 1 should be B and 1B is only with E or B. Stagflation should be C. So 2C is only there in E, therefore the answer will be option number E only. Okay, tell me what is the relationship between inflation and employment. Inflation and unemployment. Inflation and unemployment, what is the relationship? And name the curve also which depicts this particular relationship. What is the relationship between your inflation and unemployment? Tell me. What is the relationship between employment, unemployment and your, yes, it's negative. Whenever inflation rises, unemployment should fall. And what is the name of that curve which explains you this? Yes, it's known as your Phillips curve. Very good. Chaliye. Question number 35. Now we are coming to our very own Reserve Bank of India. Reserve Bank of India Reserve Bank of India plays a very important role, which is also known as Bagot dictum. Bagot dictum. This was given by Walter Bagot, a very big person when it comes to US's economy. Walter Bagot has given one thing. Tell me what is that? Walter Bagot made a comment on the, I would say, on the functions of the I would say what, of the central banks around the world. So it has to be lender of the last resort. Yes, very good. Lender of the last resort. Whenever a bank is about to fail, RBI will go and lend it. Okay, so that is known as one of the functions of RBI. Now tell me, in which year RBI Act was passed? RBI Act was passed in 1934. All these are important. RBI was nationalized in which year? 1949. RBI was established on 1st April 1935. Okay. So all these are good year of importance which you should remember. Good. Good. Chaliye. Now let's move forward to question number 36. Let's increase the speed a bit. And is my speed okay? Am I going fast? Am I making sense while explaining, or am I just wasting my time? Question number 36. Question number 36. The origins of Reserve Bank of India can be traced to 1926. A Royal Commission of Indian Currency and Finance, also known as Young Hilton Commission, was established. Which of the year was RBI nationalized? We all know the answer will be none of the above. Right? The answer will be none of the above because it will be 1949. Okay, and yes, Reserve Bank of India started its operation as a private entity. With what amount of money? With what amount of money? Tell me. With what amount of money Reserve Bank of India started its operation? And this is also mentioned in section 4 if I am not wrong. Section 3 or 4. Section 4 I think. Okay, of RBI Act of 1934. Yes, RBI started with a capital of 5 crores of rupees. Very good. Okay. And who was the first governor? Sir Osborne Smith. Who was the first Indian governor? Sir C.D. Deshmukh. All these are basic questions. Like you would have seen that how basic questions are appearing. Chaliye. So this is what is to be remembered. Question number 11. Now read this question which is coming on your screen. IFSC related questions, yes, you can found, like on which date IFSC was established, in which year IFSC Act was passed, right? How many whole-time directors are there in IFSC? That Kritika ma'am will cover in her marathon. Okay. Tell me the answer for this question. What is the main objective of capital issued by a company? If company is issuing a capital via debt or equity, what will be the objective behind it? To promote, to expand, to diversify, to meet regular working requirement? Definitely the answer will be all of the above. The answer will be all of the above, right? Let's move forward to question number 37. Question number 37. Which of the following is incorrect regarding your monetary policy committee? Which of the following is incorrect regarding your monetary policy committee? Which of the following is incorrect regarding your monetary policy committee? बताइए, what will be your answer? Now this is a tough question. Not everybody will be able to answer this. बताइए, what will be the answer for question number? I am checking the chat box. Oh wow, you all know the answer. Headed by 3 government members. Yes, it is not headed by finance minister. Therefore, the answer will be wrong over here. Right, B is incorrect. A is correct. C is correct. D is also correct. Monetary Policy Committee is for head of Central Bank, Reserve Bank of India. Each member has 1 vote. MPC will have 4 times at least a year. Now, recently only 3 members are appointed to MPC, and therefore that news becomes hell important for your exam. So do it. Do not leave it for IFSC phase 2. You can definitely get a question on it. Okay. Do remember the outgoing members also and the incoming members also. Okay. Chaliye. Now let's move ahead to question number 38. Question number 38. A basic question taken from inflation chapter. Because RBI role is to control inflation, right? So tell me question number 38. Let's see who answers question number 38 correctly. Question number 38. चलिए क्वेश्चन नंबर 38. 38 maximum people are answering as E. If E is incorrect, then what will be the correct number of items in WPI? 697. Yes, good. 679 is not wrong. It's 679 is wrong. I mean 697 is the correct one. And WPI is calculated by your Ministry of Commerce and Industry. Over here we have a separate office which calculates it. Okay, three categories. Yes, you have primary, manufacturing and fuels wale goods, so that is a different things. Now tell me, in WPI will I include services and goods? In WPI will I include services and goods, or will I only include services, or will I only include goods? What is the case with WPI? WPI always includes your goods only. Okay, WPI does not takes into account your services. Services are there in your CPI, Consumer Price Index. Okay, chaliye, question number 38 is also done. Now we are moving to 39, a pure banking related question. Typical banking related question. Typical banking related question is on your screen now. Question number 39. Now, if you have read for RBI and for, I would say, for SEBI also, the banking and the capital thing, then I think you are all sorted for IFSCA. Just you need to do some more of Bullion thing, which we will do in our class today also. 39. Yes, NPAs are declared after 90 days, right? After 90 days. Cool. And before NPA, you have a separate category. What is that category known as? For before NPA, you have a separate category, which you call it as what? Which you call it as what? Which you call it as what, my friends? Please tell me in the chat box. क्या बोलते उन्हें? Tell me what you will call it as. SMA, very good Nilesh. SMA 0. Special mention accounts. SMA stands for special mention and accounts. So 0 से 30 days में if no payment has been made for 0 to 30 days, then it will be SMA 1. SMA 2 from 31 to 60. SMA 3 from 61 to 90 days. Okay, after 90 days you will categorize as NPA, and under NPA also you have multiple categories. You have your standard asset, substandard asset. Substandard is you are waiting for 12 more months. Then you are going toward doubtful. You have waited for 12 more months, and if you are not able to realize the money even after waiting for 12 more months, यानी 3 साल रुक के भी 12 plus 12 plus 12 is equal to 36, right? So this is your 3 years waiting. Even if you are not able to get your, I would say your money, then it will be categorized as your loss assets. Okay, so if you are not able to get after 90 days, categorize as NPA. Wait for 12 more months. If you are not able to get it, substandard. Wait for 12 more months. If you are not able to get, then doubtful. And at last you have your doubtful. And last you have your loss assets. The answer over here will be option number D. Chaliye, now let's move to question number 40. Also, please let me know how many subsidiaries of RBI are there. How many subsidiaries of RBI are there? 1, 2, 3, 4, 5. How many subsidiaries of RBI is there? 40th one. And also answer the 40th question too. RBI has 5 subsidiaries. We have your DICGC, established in the year 1978. Then we have your DICGC, right? We have your Bharatiya Reserve Bank Note Mudra Private Limited, established in 1995, right? We have your REBIT. We have your IFTAS 2. We have your RBI Innovation Hub 2. So all these are important subsidiaries of RBI. Yes, what will be the answer? I am just checking your answers in the chat. So please do not let the chat dead. Please be active. It's my humble request. Tell me, what is the DICGC charges for deposit? Is it 10 rupees? Is it 10 paisa for 100 rupees? 12 paisa for rupees 10? 12 paisa for 1000? 10 paisa for 1000 or 12 paisa for every 100? Chetan is going with A. 10 paisa. Okay. Sujit is going with A. I think the answer will be E over here, because previously it was 10, but recently only, not recently, some time back it was increased to 12. So answer will be E. And yes, one more thing. DICGC protects you up to what amount of total balance in your account? DICGC protects you up to what amount of balance in your account? Tell me. DICGC protects you up to 5 lakh. Previously it was 1 lakh. But one committee, which was Damodaran committee, suggested that this 1 lakh should be increased to 5 lakhs at least. Okay, still in India it's very low. Okay, still we are trying to increase it. But the premium which is collected from the banks, it is 12 paisa on every rupees 100 deposited. Do remember, the answer will be option number E. Chaliye, now let's move to 41. 41. Dash refers to the amount of debt a firm uses to finance its assets. Tell me what will be the answer for question number 41. See, margin cannot be your answer, because margin is the amount of money which you deposit. Futures is a derivative contract. So answer has to be option number A or none of the above. Tell me what will be your answer for question number 41. Leverage, right? Leverage basically means that what amount of debt you are having in your company. Are you overexposed to debt, or are you underexposed to debt? So that you will only come to know with leverage. Leverage basically is, it should be in optimum level, neither too high, neither too low. Okay. Why it should not be too high? Because you will be paying interest on it, and interest will definitely be a charge against your profit. But debt is also good, because debt always allows you to save your tax. So you always have to take the middlemost part. Okay, let's move to 42. RBI Act. Which of the following section of RBI Act provides provisions of right to issue bank notes to RBI? RBI can issue notes, bank notes, under which particular section of RBI Act of 1934? Certain sections are important. Like, if I'm not wrong, section 24 of this particular act, RBI Act, talks regarding CRR. Section 42 of Banking Regulation Act talks regarding SLR. Okay. बताइए what will be the answer for question number 42. Question number 42, section 22. Very good. Section 22 is the right answer. Now tell me, under which section of which particular act RBI distributes banking license? Banking license. Under which particular section of which particular act? A biggest question. Let's see who answers this correctly. RBI distributes बैंकिंग लाइसेंसेस अंडर डैश पर्टिकुलर एक्ट, और उस एक्ट के कौन से सेक्शन के थ्रू आरबीआई डिस्ट्रीब्यूट्स इट. लेट्स सी हु आंसर्स दिस टफ क्वेश्चन करेक्टली. BR Act, yes. Banking Regulation Act, good, of 1949. But what section is there? Section 22. Very good. Section 22. Okay, this time speaking with 95% of confidence level. Somebody just check it on Google and we can make it at 100% also. Okay, this I'm speaking with 95% of confidence. Okay, section 4 है, section 22 है. Can somebody check on Google? BR Act second schedule. No, that is different. I think it's section 22 here, because section 22 is like historic sections of Banking Regulation Act and for RBI Act also. If possible, somebody please check it. We will take it again. Chaliye, now let's move ahead. Like see, section 17, the business which RBI can do. Section 42 is of cash reserves in India. Okay. Section 42 is maintenance of cash reserves, and section 22 is rights to issue bank notes in India. Let's move act. Section 22, right? So I was correct. Cool. Let's move forward now. Question number 43. Question number 43. The Reserve Bank of India has RBI Act of 1934. Which schedule classifies a bank? Which schedule classify a bank as a scheduled commercial bank in India? Is it second schedule? Is it third schedule? Or is it fourth schedule or fifth schedule of the RBI Act? Yes, it's your second schedule of the RBI Act. So option A is correct. If your bank is registered with RBI in the second schedule of the RBI Act of 1934, that is definitely a very prestigious thing, because you are registered with RBI as a sixth schedule commercial bank. Good. Let's move forward to question number 44 now. Let's move forward to question number 44. 44, my friends. Let's see who answers this correctly. Now we are discussing regarding NAFBIT. Do remember, in India there are 5 development financial institutions, or your all India financial institutions which are working. You have your NABARD, National Bank for Agriculture and Rural Development. You have your EXIM, Export and Import Bank of India. You have your, I would say what, NHB, National Housing Bank. You have your SIDBI, and joining the race is your NAFBIT also. So let's see who answers this question correctly. I am waiting for your answers. Please let me know in the chat box what will be your answers. बताइए. Will it be option A? Will it be option B? Will it be option C? Or will it be option D? NABARD was established in which year? 1982, right? The act was passed in 1981 by the committee B. Sivaraman, if I am not wrong. EXIM, the same thing. Established in 1982. Act was passed in 1981. EXIM is for export and import. NHB, if I am not wrong, 1988 is the establishment year and the act was passed in 1987. SIDBI Act was passed in 1989, established in the year 1999. NAFBIT is the most recent one. Is Act 2021, established also 2021, right? So NAFBIT was established on, bill was in 2021, established, yes. Principal development, yes. NAFBIT basically provides long-term capital finance to the developing projects in India. It is regulated by RBI only. NAFBIT is fifth after all of them, so answer will be option number E. Okay, NAFBIT headquarter is in Mumbai, if I am not wrong. Okay, chaliye, now let's move forward to question number 45. Yes, NHB Act is 1987, SIDBI is 1989, establishment is 1999. Okay, question number 45 now. Dash involves trading in a public company stock by someone who has a non-public material information about a stock for any reason. That, my friend, is known as insider trading. Insider trading basically means what? That you have a kind of a secret information, but you are not revealing it to the outside persons. Okay, and there is a difference between insider trading and your, I would say what, front running and insider trading. These are kind of having a secret information which other person don't have, but insider trading is happening inside the company only. Front running happens outside the company, you can also say, like you and your broker is getting involved, so your broker is not working with you, rather he is outside to the company. Okay, but these both terms, front running and your insider trading, are kind of having certain secretive information. Now, when it comes to two more words which I would like to pick from the options, hedging basically means to play safe. Arbitrage is basically your arbitrage opportunities. Okay, buying and selling in one different or another market. But when it comes to bulk and block trade, tell me what is the block trade requirement for, I would say, BSC and for NSC. You need to execute a trade over and above and what, so that it can be classified as a block trade. You need to execute a trade over and above and what, so that it can be classified as a block trade. 5 crore, 10 crore, 15 crore or what? No, Ashutosh. Block trade I am asking, not bulk. Yes, for block trade it is 10 crore. For bulk trade it is 0.5% of the outstanding shares, or simply saying 0.5% of the outstanding shares. Okay. For bulk it is 0.5. Good. Chaliye, question number 46 now. An interesting question on your screen. Question number 46. HFCs are registered under Section 29 of National Housing Act. Minimum HFC requirement is 20 crore. HFC is regulated by NHB. What will be your answer? What will be your answer? See, NHB, National Housing Bank. NHB was previously a regulator of HFCs, housing finance companies. Housing finance companies are kind of an NBFC only. But now they are not the regulator. Regulator of HFCs is now RBI. NHB just supervises it. Okay, supervision function is still with NHB, but RBI makes all the rules and regulations. So HFCs are regulated by NHB. This statement is wrong. They are supervised by होगा यहाँ पे. Supervision is different from your regulation. Regulation means to check whether regulation means to make rules. To make rules. Supervision means to check whether rules are implemented or not. So NHB is a supervisors for, I would say, what, for your housing finance company, but regulator is your RBI only. So only statement number, I would say, what, 3 is incorrect. Therefore your answer will be option number D. This 20 crore and this is right. Okay, so answer will be option number D. Let me see my chat also. Yes, very good. Chaliye, now let's move forward to question number 47. Question number 47. What will be your answer for question number 47? Let's see who gives me the right answer for question number 47. 47 का right answer. Identify the type of an NBFC which retrieves, consolidates, organizes and presents the financial information of its customer. This is known as NBFC AA, NBFC Account Aggregator. Account aggregator. ICC is your investment and ICC is your investment wala, like investment and capital something. SPD is your special primary dealers. P2P is your peer-to-peer lending. MFI is your microfinance institutes. Okay, so NBFC ICC is your investment and credit, if I'm not wrong, something like that. Okay, so answer over here will be your NBFC account aggregators. Cool. Chaliye, now let's move to 48. Now we are coming to typical banking. Typical banking involves your NEFT, IMPS, your multiple other transactions like RTGS also. So tell me what will be your answer for question number 48. Question number 48. 48 का आंसर क्या होगा? "48 answer. See, when it comes to NEFT, NEFT is your National Electronic Fund Transfer. Sorry. What is this happening? Yes, now I think everything is good. Yes, NEFT is your National Electronic Fund Transfer. NEFT के अंदर the minimum limit is ₹1 or many people write it as 0 also, but 0 doesn't make any sense. At least you will transfer some, right? So it is ₹1. In NEFT you do not have any kind of upper ceiling also. NEFT के अंदर you can deposit any amount of money, right? No max limit, no minimum limit. Yes, good. Therefore the answer will be option number E. But tell me, in NEFT will I be able to have real time settlement of funds? In NEFT will I be able to have real time settlement of fund? In NEFT will I be able to have real time settlement of fund? In NEFT will I be able to have real time settlement of fund? Agarwal, please post your doubt on hello@edutap.co.in. They will help you. Okay. Yes, you cannot have real time settlement of fund because over here there is a batch. which is executed in togetherness. That batch is executed after 30 minutes. So in 30 minutes I will collect and then I will execute it. Okay, so over here you have a kind of a gross settlement, not real settlement. Okay, cool. Let's move forward to question number 49. But who manages? This is for your NEFT. RBI, no limit, and it is available 24 hours 7. A total of 48 batches in 24 hours. Why 48? Because I have told you, right, that 30 minutes में one batch will be executed. So in 1 hour there will be 2 batches. So in a day there are 24 hours multiplied by 248 batches. Okay. Yes. And this is for RTGS. In RTGS you need to have a minimum requirement of 2 lakh, and in RTGS you have a real time gross settlement. Real time gross settlement mean was that you basically transfer the money and the money will be added to the other party's account like instantly. Okay, so over here again both NEFT and RTGS comes under RBI. Minimum amount for NEFT is ₹1. For RTGS it is 2 lakh, and rest everything is very easy to remember. Okay, let's move forward to IMPS now. IMPS. Question number 49. IMPS is a product of your NPCI, National Payments Corporation of India. Tell me, for IMPS, what is the maximum amount? Previously it was 2 lakh, but now it has been increased to 5 lakh. But for IMPS again, the minimum amount is ₹1 and maximum over here is 5 lakh. Over here also you are having a kind of a real settlement. The moment you press send, the money will be added to the other person's account if you entered your password correctly. Okay. Previously it was 2, but now it has been increased to 5 lakh. Therefore the answer will be option number E. Okay, IMPS managed by NPCI, no limit, minimum as in maximum is 5 lakh, available 24 hours 7, immediate real time. Okay, let's move forward now to question number 50. Come on, we have to solve 40 more questions after this one. Nobody will lose their energy. UPI. Now for IPO and for retail direct scheme, if you are investing through UPI, then what will be your, I would say, what maximum investment limit? What will be your maximum investment limit? What will be your maximum investment limit as per UPI? D? Yes. For UPI, if you want to invest, you can invest up to 5 lakh max. Okay? Good. Chaliye. For UPI, this we have to remember, as simple as that. Chaliye. Question number 51 now. Now there was a lot of buzz regarding digital banking units, DBUs. So which of the following institution can open a DBU in India? Digital banking units can be opened by tax payment. This I am unsure. Tax payment through UPI. Chaliye, please try to answer question number 51. Let's see who answers this correctly. Please answer it. Please answer it. All of you. Only A. But regional rural bank, payment banks and local area banks are not allowed. Yes, tax payment limit is also 5 lakh. If I am not wrong, previously it was 1 lakh, but then it was increased to 5. But I am not 100% sure. Like I am like 90 to 95% sure on tax payment wala thing. Okay, so you can check on Google also if time allows you. Chaliye, question number 51. Which of the following financial institution can open a DBU? The answer will be all of the no. It will be your scheduled commercial banks only. by which I mean only those banks which are registered in the second schedule of the RBI Act can open a DBU. Therefore, the answer will be option number A, not B, C, D. Okay. So, excluding regional rural banks, payment banks and local area banks. Now let's move to question number 52. Question number 52. Question number 52. Let's see who answers this correctly. Question number 52. If I have to connect all my ATMs, then how will I be able to connect it? And it enables interoperability between all the ATMs, banks, allowing customer to access their accounts and to perform transactions on ATM. So this, my friend, is known as what? NFS, National Financial Switch. National Financial Switch, which is your option number C. So answer will be option number C. Now this is very basic banking awareness CA. Okay. I hope you know it. NFS is the correct answer. Question number 53. This we have done a lot of time. Minimum application for an anchor investor is 10 crore. Okay, so I'm not wasting my time on this. Rather, let's move ahead to question number 54. Yes, who is the regulator of who? Which of the following is the regulator of capital market? Tell me. Is it SEBI? Is it RBI? Is it NPCI? Is it SEBI, SBI, or is it NSE? Who is the regulator of capital market in India? We have your SEBI. Okay, SEBI is regulating the capital market. Okay, RBI, you all know the banking industry and the government securities. NPCI, payment and settlement. SBI is just a scheduled commercial bank. NSE is just a stock exchange. So answer will be option number A over here. The answer will be A. Okay. Question number 55 now. Question number 55. Which of the following statement is true about payment banks in India? Payment banks can accept deposit up to 2 lakh. Payment banks can issue credit cards. Payment banks can provide loans. Payment banks focuses on financial inclusion. Yes, RBI is a regulator of money market. Very good, Ashutosh. But for question number 55, what will be your answer? Question number 55. See, payment banks in India can only accept deposit up to 2 lakh only. So this statement is correct. But payment bank cannot give any kind of loan, whether it's long-term loan or short-term loan. Right? So they can also not issue a credit card. Why? Because credit card is also kind of a short-term loan which a banks issue. Right? So if you see, the answer will be only 1 plus 4. Therefore your answer will be option number C. Therefore your answer will be option number C. Right. Cool. So answer will be option number C. C, not E. The answer will be C, right? Yes, that's C. Why you are saying E? No, E is not correct because payment banks cannot provide you any kind of loan. Okay, let's move to 56. Don't worry, Agarwal, it will be posted again. It might be a glitch. Regarding NABARD, consider the following statements. Regarding NABARD, consider the following statements. Now try to answer. This is taken from your banking again because NABARD is also very much active in banking. Question number 56. NABARD was established based on the recommendation of B. Sivaraman committee. This statement is correct. We all know it's a very famous committee. Like if I ask you NHB was recommended by which particular committee? Tell me. NHB 1987 में which committee recommended it? Yes, very good. Statement 3 is incorrect. 1, 2 is correct. Yes, 4 is the basic objective of having NABARD. So answer will be option number B. It is not owned by Reserve Bank of India. It is owned by Government of India. Okay. But tell me which committee recommended the setting of NHB, National Housing Bank. Which committee has recommended NHB setup? NHB का setup किसने किया था? किस committee ने किया था rather? It was, hello, please participate. Yes, C. Rangaranjan committee. Okay, C. Rangaranjan committee is also very famous for computerization of banking industry. Good. Chaliye, so answer will be option number B. Let's move forward to question number 57. In India, who is the supervisor for RRBs? In India, we know RRBs are regulated by RBI, but the supervision happens through NABARD. The supervision happens through NABARD. Therefore, the answer will be option number B. A very basic and a straightforward question. Let's move forward to question number 58. Try to answer question number 58. Try to answer question number 58. Question number 58. My friends. 58. Let's see who answers 58 correctly. 58. E. See, NHB never regulates. NHB only supervises. So A is incorrect. RBI regulates all banks and finance institutions falling under cooperative. No. RBI never regulates the long-term cooperative finance that comes under state government. So B is also incorrect. Okay, but RBI regulates urban cooperative banks, which is also known as the primary cooperative banks, but not all the cooperatives. A subcommittee on FSDC was formed to assist FSDC. The committee is headed by Finance Minister. No, it is headed by RBI Governor. Okay, so FSDC, Fiscal Stability and Development Corporation, is your, I would say, has two major committees. The main committee is headed by Finance Minister, which is a FinMin, and your subcommittee is headed by RBI Governor. Okay, so the correct answer will be none of the above, because none of the above statement is incorrect. All the three statements are incorrect. सारे के सारे statements गलत है. Therefore, your answer will be option number E. Good. Question number 59 now. In the world of finance, which of the following clearly defines hot money? In the world of finance, which of the following clearly defines hot money? Hot money means money which is not stable. It keeps on changing the hand, or it keeps on changing the country on country basis. आज इंडिया में इन्वेस्टेड है, कल यूएसए चल जाएगा, यूएसए से फिर रशिया, रशिया से फिर यूक्रेन, यूक्रेन से फिर ईरान, everything like that. So that is like hot money. It is not stable. So what will be the answer for question number 59? 59A. Yes, hot money is dumped into the country to get the advantages of favorable interest rate. So you move the money from one country to another so that you can earn an higher amount of money. And therefore, this time you would have heard about Tobin tax, a very famous kind of tax which is generally imposed to avoid this kind of movement. Okay. Chaliye, so answer will be option number A. Rest all this is never making any sense, right? So let's come to question number 60. A very basic question related to financial inclusion of banking area. Question number 60. Yes, your analogy is correct. Question number 60. 60, my friends. Let's see who answers correctly for question 60. Yes, these are known as business correspondents who take the services to multiple, I would say rural and hinterlands of India. A very basic question. If you are not getting this question, then definitely your revision is not good. Answer will be option number B. 61 now. 61. The Nidhi companies are regulated by which of the following regulators? Nidhi companies are regulated by which of the following regulators? Nidhi companies are your mutual benefit companies, okay, which contributes an amount and then they distribute within themselves. These are regulated by SEBI, RBI, Ministry of Corporate, state governments, or none. Yes, these are regulated by Ministry of Corporate Affairs. Therefore, the answer will be option number C. Good. Chaliye, now let's move to question number 62. Let's discuss some questions of mutual funds also. Chaliye, question number 62. In a very short time rather, we will start with Bullion also. So this is all capital and your banking sectors. Question number 62. 62B. Yes, open-ended funds are those in which you can buy and sell anyhow and then. Open-ended funds can be bought and sold continuously, but close-ended, once you come with the close-ended mutual fund, you have a fixed number of shares traded on the stock exchange. Okay, so answer will be option number B. Cool. Basically, open-ended means that you can go buy and sell anytime, but in close-ended there will be a window. In this window only you can buy and sell. In rest of the window you cannot do any buying or selling. It is freezed. Let's move to one particular concept, which is question number 63. Which of the following fees is typically associated with a mutual fund and is charged annually by as a percentage of total fund asset side? Entry load, exit load, expense ratio, or redemption fee? What will be your answer? Yes, it's my expense ratio. Expense ratio is basically the fee which I am paying to the fund manager, because he or she is managing my money by mobilizing it into different stocks, right? So you pay expense ratio. Okay. Exit load is like once you sell then you have to pay, but maximum times exit load is not charged. Expense ratio is charged. Which is riskier? What is riskier? I am not able to understand your doubt. Please tell me the question which you are referring to. Okay, question number 63. Which of the following best describes fund of fund? You also have to you would have heard about ELSs also. Tax savings fund or equity linked savings scheme. This is also very famous, right? Yes, entry load is not there. Good, but you pay stamp duty, right? On every mutual fund transaction you have to pay stamp duty, so that is a kind of an entry load only. Question number 63. You pay stamp duty and STT also, securities transaction tax. Fund of fund is that particular fund which will have a big fund, and that particular fund will invest his or her money into multiple other mutual funds. So answer will be option number B. Good. Chaliye, question number 64. Riskier, if you see, close-ended is more riskier. Open-ended mein you can come and buy and sell anytime. Okay. See, in mutual fund the risk depends upon beta. You would have heard about that mutual funds are able to beat their indexes. If they are able to beat, then it's a good mutual fund. If they are not able to beat the index return, then definitely they are bad. But open-ended is generally more considered as less risky because you can enter and exit anytime. Question number 64. Small finance banks. We have done payment banks and now we are doing small finance banks. Payment banks and your small finance banks together, if I combine them, they are also known as niche banks. Niche as in that they are targeting a particular section only. Okay. So small banks are primarily established financial inclusion. Yes, small finance can accept demand and saving. Can small finance banks provide you loans? Can small finance banks provide you loans? Can a small finance bank provide you loan? Yes, small finance banks has a target of 75% of PSL, not 40%. Okay, and for other banks, like for scheduled commercial banks, it is 40%, out of which 18% has to be done towards farmers, 7.5% towards, I would say, MSMEs. Okay, and out of farmers, some weaker section has to be identified, that is 12%. Yes, a small finance bank can give a loan, but can a payment bank give a loan? The answer will be no. Do remember it. Yes. चलिए, now we are coming ahead to question number 65. Block deal we have already done. A transaction which is having an at least amount of 10 crores. Okay, so answer will be option number A. Okay, and there are two windows, one in morning and one in evening if I'm not wrong. In these two windows only you can execute a block deal. So answer will be option number A over here. Okay, 66 is from your Basel. Chalo, let's revise Basel also. Basel norms first mainly refer to credit risk and then the risk of borrowers defaulting on the loan, bonds and debt. But in 1996, Basel 1 was extended to dash risk. Basel 1, if I am not wrong, was given in the year 1988. India adopted it in the year 1999. So Basel 1 firstly only focused on credit risk. Like to calculate your risk weighted assets, we were only taking credit risk. But later on we have added one more type of risk. What was it? Yes, it was market risk. Okay. It was market risk, sorry. Now, if you see my friends, your total capital adequacy ratio is 8% according to Basel and for RBI it is 9%, right? Now tell me, from this particular capital, what amount should be given to tier 1 and tier 2? First Basel ka. Tier 1 and tier 2 capital, I hope you know. Tier 1 capital is like ongoing capital, which is pure capital. This I will use in my daily operations of the business. Tier 2 capital is like gone case. My business has collapsed, now I am using tier 2 capital. But tell me, for I would say 8% of capital adequacy ratio, what will be my tier 1 and tier 2? Hello, is my question clear to you? Yes, 6 and 2 is saying yes, it's 6% and 2%. Okay, same goes for the RBI also. Tier 2 is 2% only, but RBI increased tier 1 to 7%. And tier 1 is further classified into common equity tier 1 and additional tier 1. Tell me what is the value of additional tier 1 and common equity tier 1 for this 6% now. It's what? Tier 81 is 1.5 if I am not wrong, and rest for it will be 4.5 and it will be 5.55 for RBI. Okay, yes, very good. Chaliye, now let's move ahead to question number 66. What is the basic difference between tier 1 and tier 2 capitals? What is the basic difference between tier 1 and tier 2 capitals? बताइए, 66 का आंसर बताइए मुझे. $66. 66, my friends. Please answer. And yes, tier 1 and tier 2 both are important. You would have seen a question has come related to leverage ratio also. So, tier 1 and tier 2, can I use them interchangeably? No, no, no. Tier 2 is pure. No. Tier 2 is cover credit. No, no. Both type of risk covers. So, B, C, D, and E are incorrect. No, no, no. This is also incorrect because equity and retain comes in your tier 1. So, answer will be option number A. Okay. Chaliye. Let's move forward to question number 67 now. 67 on my screen. Let's try to solve it. Let's try to solve question number 67. 67 is on our screen now. Let's try to solve it. Let's see who gives me the correct answer for 67. Yes, this is your CCB, capital conversion buffer. We also have CCYB. Tell me the limit for both. CCB is 2.5%. This I agree, so your answer will be B. But what will be your limit for CCYB, which is known as counter cyclic capital buffers? Counter cyclic capital buffers. What will be the limit of CCYB? बताइए. बताइए बताइए. I am waiting for your answers. And why only few students are answering? Please जागो ग्राहक. Otherwise, I will be angry. 67B, yes. CCYB ka it will be 0 to 2.5%. Good. 0 to 2.5%. Very good. Okay. And if I ask you, is CCB mandatory? Is CCB mandatory? Is CCB mandatory? Is CCB mandatory? Please tell me. Is CCB mandatory? Is CCB mandatory? क्या CCB को मैंडेटरी करना जरूरी है? Yes, CCB is mandatory, but CCYB is optional. Okay, good. चलिए, now let's move forward to question number 68. Now let's move forward to question number 68. 68, my friends, is in front of your screen. So let's try to answer this question as well. चलिए, hardly few more questions to go. Please do not lose your energy. I know it's tough to appear for multiple exams, but we can do so. We are also champions, right? So what will be your answer? बताइए. बताइए, what will be your answer for question number 68? Banks are expected to maintain a leverage ratio under Basel 3. So under Basel 3 it is your, I would say what? Under Basel 3 it is your 3%, right? But RBI says 3.5 and your RBI for DSIPs says it 4%. Now my question to you is, how many DSIPs are there and what is the criteria that yes, you can identify that this particular bank will be classified as a DSIP? So tell me that also. Please tell me about DSIPs a bit more. Yes, very good. For DSIPs it's 4. Yes, there are 3 DSIPs: SBI, ICICI and SDFC. But what is the criteria? Why we are not calling a Kotak bank, which is also a big bank, as a DSIP in India? No, I am not getting any answer. Interconnectedness तो कोटक में भी है, asset size उनका भी बड़ा है. So what is the criteria? Today you think this bank, Kotak Mahindra is Punjab National Bank. They are also very big. सोचो. DSIPs carry systemic risk. All this is blah blah. Nikhil is saying too big to fall. Again blah blah. Shruti is saying market clap. Again blah blah. Come to the main point. You are not writing an essay in IFSCA, right? Yes, Nilesh has come to the point. It's 2% of the GDP. Their total MCAP or their total asset size is 2% of the GDP, of the Indian GDP. So any bank who crosses this 2% limit, it will be automatically classified as a DSIP. Okay? So do remember it. Chaliye. Now let's move forward in the class. And yes, leverage ratio is what? Your tier 1 capital divided by your total exposures. Okay, then only, and multiplied by 100 obviously for percentage. Chaliye, now let's come to 69. Now let's come to 69. A liquidity coverage ratio was supposed to require a bank to hold sufficiently high liquid assets to cover its total cash outflow for what? Now we have liquidity coverage ratio. All these are the part of Basel 3. Basel 3 has 6 components. Minimum capital, CCB, CCYB. You have your leverage ratio, you have your liquidity ratio, you have your systemically important financial institutions also. Okay. So tell me what will be the answer for 69. LCR, your liquidity coverage ratio, covers your liquidity for 30 days. But there is one more ratio which is NSFR. Net stable funding ratio covers your liquidity for 1 year. The value of both these ratios should be above 100%. So answer over here will be option number D. 30 days. Okay. Yes, chaliye. Question number 70. After this we will start our spot and precious metal and then bullion. Question number 70 now. Question number 70. What does Hurdstat risk primarily refer to in financial markets? Hurdstat risk is basically your international Settlement risk, international settlement risk. So the risk of default by counterparty in a foreign exchange transaction, yes. Before a counterparty currency is received due to the time zone, yes, international settlement is there due to time zone only. So answer will be option number A. Good. Chaliye, now let's move towards the spot and commodities market. So first question which I am asking you is, who regulates commodity markets in India? And only few people are responding. For all the other person, should I come to your house to give you a glass of water, or will you all respond? Question number 71. Who regulates commodity market in India? Is it the government? Is it the RBI? Is it the SEBI? Is it the Ministry of Finance? Or is it the Forward Market Commission? Who will regulate it? The answer will be option number C. It's SEBI. SEBI regulates commodity markets. Okay. Earlier Forward Market Commission was there, but it was merged with SEBI. So now SEBI is the regulator of commodity markets in India. Good. Chaliye. Question number 72. Now in India, commodities are traded on multiple things. NSE, you have commodity futures. BSE, again you have commodity futures. You have National Commodity Derivatives Exchange of India, NCDX. You have your multi-commodity exchange also. So multiple exchanges are there wherein commodities traded. Commodities traded in the form of physical also, or in the form of derivatives also. Okay. But Forward Market Commission was basically a kind of a committee which was previously regulating all the major affairs related to commodity and stock exchanges, but later on it was merged with SEBI. If I'm not wrong, in 2016, if I'm not wrong, 16, if my memory serves me well. Okay, the merger happens in 2016. Okay, 72C. Yes, if you see NCDX, National Commodities Derivative Exchange of India, they trade a lot in agriculture commodities. Like you will see derivatives related to cottons, a derivative related to groundnut oil, a derivative related to another agriculture products which are allowed to be traded. So NCDX is basically formed. It is basically taking care of, I would say what? Of all the agriculture commodities trading. Okay. Okay. So please note, Forward Market Commission, it was merged in 2015. I will check this as Nilesh is saying, so I am just validating it. But it's 2015 or 16. इनमें से कोई एक है. Okay. Question number 73. Question number 73 now. 73. Question number 73. Question number 73. Yes, 2015. Okay, Shruti. 73 now. Now there are two type of commodities: soft commodity and hard commodity. Hard commodity and soft commodity can further be bifurcated. Hard commodity where you have precious metals and your other like crude oils and something like that. Okay, like energy related stuff. Soft commodity where you have agriculture stuff and livestock related stuff also. But what is the difference between hard and soft? Can you let me know in the chat box? B. Anyone who would like to go with E, D, anyone else? Yes, hard commodities, soft commodities are grown. Like for example, soya bean, for example, I would say multiple types of grains. Okay, but hard commodity is extracted. Even if you see hard commodities comes with a precious metal. Precious metal includes what? Your gold, your silver, your I would say diamond, your I would say platinums, or all these are what? Precious metals. Energy related like crude oil. You would have seen natural gas. You would have seen again different types of oils which are extracted from the mother earth. Soft commodities में agriculture and livestock, like you would have seen livestock grazing, you would have seen meat related products. So all this is livestock related products. Agriculture is like basic agriculture like groundnut oil, sunflower oil, all those stuffs. Okay, now the chapter which is mentioned in your, I would say, what in your notification is related to precious metals only. Okay, and in precious metals the most important thing is gold and silver. Okay, so spot and derivatives on precious metal. So this is how you have to relate कि precious metal is a hard commodity. चलिए question number 74 now. Question number 74. What defines a tick size in commodity trading? Tick size in commodity trading refers to what? Tick size is also there in your equity markets, but what is the tick size in commodity market? Tell me. Question number 74. What defines a tick size in commodity? B. Minimum price movement. Yes. Sometimes the tick size is 1 paisa. Sometimes the tick size is 5 paisa. So that is followed in commodity trading also. So answer over here will be option number B. Good. चलिए one more question. Try to identify the incorrect for MCX. Question number 75. Yes, tick size will be different for all the contracts, right? Like for example, the spot will be different, the future one wala will be different. But I'm saying the concept. 75. C. Yes, MCX is a larger. MCX indeed it's a larger domain like NCDX. NCDX only trades in agriculture commodities. On and large, only agriculture commodities are available on NCDX. But MCX, multi commodity exchange, agriculture, metal, energy, and whatnot. You name it, and they have everything. So MCX पे larger trading happens and the volume also is very very high. So this statement is incorrect that MCX trades in agriculture commodities only. That is wrong. MCX is known for wide range. Yes, MCX operates under the regulatory domain of SEBI because SEBI is a regulator of commodity market. MCX offer for both options and futures. Yes. MCX is publicly listed. Yes, this is also correct because MCX you can just type on BSC or you can just see that you will be able to find a share price for MCX also. Okay. Cool. MCX headquarters. MCX headquarters again I'm not sure, but it should be in Mumbai. Please check this again. I'm not that 100% sure. Let's move forward to question number 76. 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 Shruti, have you checked it or are you just are you just saying it? Somebody can check like MCX headquarter, लिख दो Google पे and you will be able to see the results. Question number 76. Which are the following? Now we are starting with bullion. Okay. Now bullion is a market wherein only gold and silver are largely traded. Okay. So bullion is a separate market. Like we have equity market. Now we are coming to bullion. चलिए. Okay, so MCX headquarter is in Mumbai only, confirmed. Okay, thank you. Which of the following is the primary objective of bullion market in global financial ecosystem? To provide a platform for, yes, the first statement itself is making sense. So answer will be option number A. Extraction and distribution to facilitate loans. No. Answer will be option number A only. Okay. चलिए. Now let's move forward to question number 77. Now in bullion, one of the breakthrough development is IIBX, Indian International Bullion Exchange. I am expecting a question on it. Let's see if IFSCA and me are on the same platform. But last year they have asked some gold related schemes that we will cover in our class too. But this year they can shift to IIBX, one of the major platforms of bullion trading in India. 77, try to solve it. $77, let's see who gives me the right answer. Let's see who gives the right answer for 77. IIBX was formed in the year 2022. Therefore, the answer will be option number C. Yes, 29 July. Everybody is like on the correct point. It's 29 July 2022. Okay. And yes, which particular body is regulating IIBX? Is it SEBI? Or is it RBI? Or is it NABARD? Which particular body is regulating IIBX? Fast, a bit fast. It's 2:21. We will wind up by 2:45. Even I am tired today. Tell me, IIBX is regulated by whom? Hello? Who regulates it? Tell me. Because see, if there is an exchange, it has to be regulated. Who regulates it? Yes, it's your IFSCA, International Financial Services Center Authority. Good. Chaliye, question number 78 now. Which of the following statement is correct regarding the India's International Bullion Exchange? IIBX is regulated by SEBI? No. IIBX is regulated by IFSCA and promoted by 5 institutional investors. CDSL, NSE, MCX, India INX is a subsidiary of BSC and your NSDL. So this statement is correct. IIBX platform is promoted by private banks? No. IIBX is regulated by SEBI? No. So answer will be option number B over here. Good. Chaliye. Question number 79 now. Which of the following entities are eligible to become a member of India's International Bullion Exchange? So can only qualified jeweler become a sweller? Qualified jeweler is like a buyer. Qualified jeweler is like a buyer. Simple. Okay. Registered partnership firms, LLPs or IBU. IBU is your IFSCA banking units. Non-resident individual foreign bullion suppliers adhering to OECD guidelines in private liability companies. All of the above. Or none of the above. 79, I am getting the answers as D. B also. Yes, all of the above is the correct answer because all these entities can become a member of IIBX provided that they register themselves with IFSCA. Okay, so answer will be option number D, and I have attached image also which you can read once you get the PDF. Question number 80. Chaliye, last 10 questions to go. Questions number 80. Through which of the following does settlement of trades happen on the India's International Bullion Exchange? Indian rupees and euro, only Indian rupees, US dollar, euros or British pounds. Like what is the currency of settlement on IIBX? Can I use rupee or can I use euro? Can I use a combination? SEBI Grade A results. Even we are tired. Okay, just move on. Whenever it will come, you will come to know. Simple. Yes, the answer will be only in US dollars. This is a very important fact to remember, that all the trading on the IIBX happens with US dollars only. So anyone who would like to participate, they will have to convert their Indian national rupee to USD, and this will only happen with authorized banks. Authorized banks, I hope you remember, Forex market chapter, authorized dealers rather. Okay, so RBI gives the license under section 10 of FEMA. Okay, let's move forward now. Question number 81. Question number 81. Dash serves as the holding company, a kind of a parent company or a kind of an owner company for India's International Bullion Exchange and for Bullion Clearing Corporation. Tell me, which of the following act as a holding company for Bullion Clearing Corporation and for IIBX? What will be your answer? What will be your answer, my friends? Please confirm in the chat box. Please confirm in the chat box. Yes, very good. It's your IIBH, Indian International Bullion Holding. This particular company is holding all the shares of IIBX and India's International Bullion Clearing also. Even if you see the ecosystem chart, this is the ecosystem. On the top you have IFSCA, which is completely the regulatory body of this system. Then you have IIBX and IIBX Clearing. IIBX is a platform on which trades will happen. IIBX Clearing is like a clearing house for IIBX, like for, I would say, for NSC and BSc we have a clearing house, right? So they are also having a separate clearing house, and these both institution comes under the domain of IIBH. Okay, it comes under the domain of IIBH. This ecosystem is also very important, my friend. Do remember all the parties. Like depositories, we have vaults, we have clearing members, clients. Now clearing members or trading members की ही 4 categories है. This we have covered holistically in the course. And there is trading members, there is professional clearing members, there is self-trading and come professional members and whatnot. So if you are reading this, read it holistically. Okay. Yes, IFSC is above IIBH. That's also correct. No. Parent company is IIBH. IFSC is a regulator. In my question, it was clearly mentioned that who act as a parent company. IFSC is not a parent company. IFSC is a regulator. Tell me, who is the owner of SBI? Is the owner of SBI RBI? No, right? RBI is just a regulator. SBI is owned by Government of India and some other entities. So our IFSC is just a regulator over here. They are not the owners. There is a difference between owner and, I would say, what, regulators. Okay. 82. And by the way, how many of you are from EduTap? Like how many of you have covered Bullion from EduTap? Like how many of you covered it? One student I remember, others I am not sure. Tell me the answer for 82. For how long is the clearing function of the India's International Bullion Exchange expected to remain under the control of exchange? Yes, Shruti, I know you because I see your doubts on discussion forum. But what about others? John also. Okay. Covered from other sites. Okay, nice. Yes, the answer will be 3. Like even if you see this particular diagram, they have shown IIBX clearing and IIBX in one box because currently IIBX is operating in the IIBX only. IIBX clearing, I mean, is operating in tandem with IIBX, and this will happen for 3 years. Okay, this is currently for 3-year period. After it, we will decide that what will happen. Cool. Chaliye. Now let's move forward to question number 83. What is the minimum net worth requirement for a qualified jeweler to be registered with the Indian International Bullion Exchange? Qualified jeweler is like your buyer. So what is the qualified jeweler requirement for, I would say, your, your 83. Yes, the answer will be 25 of crores of rupees. Like today we have Tanishq, today we have Kalyan Jewelers, Malabar Jewelers. So if they want to register themselves as a buyer, they need to have a net worth of 25 crore plus 90% of their business should be in bullion only. Okay. Chaliye. Now let's move to question number 84. Like we have a block deal on NSC and on BSc, we have a block deal on the IIBX also. What is the block deal requirement for IIBX? Tell me the answer for 84. 84 का आंसर आप क्या रखना चाहोगे? See, in IIBX, the value of the block deal has to be of 100 kilograms. अब 100 kilograms of सोचो gold. If you are purchasing 100 kilograms of gold, then definitely you are a very rich person. Okay, like today people are not even able to purchase 1 kgs of gold because the gold prices are appreciating day in and day out. But 100 kgs of gold is like very big thing. Okay, so answer over here will be your option number C. Okay, 50 is not right, 1000 is also not right, so answer will be B. चलिए next question, last 5 questions to go. What is the bullion depository receipt? Now definitely in your IIBX you have a BDR, because this BDR shows you that yes, you are a owner of a gold and you will deposit the gold in the vaults and the vaults will issue you a BDR. Tell me, what is BDR according to you? What is BDR according to you? A or C? C never makes any sense. D also never makes any sense. No. A will be the correct answer, because the certificate representing a physical stored in the secured vault allowing easily transfer. Good. 86. Now we are discussing 5 questions based on 2 very important schemes: sovereign gold bond scheme and your gold monetization scheme. Do these schemes for your bullion chapter because they are important. चलिए बताइए क्वेश्चन नंबर 86 का आंसर. क्वेश्चन नंबर 86. Tell me your answer for 86. Tell me your answer for 86. 86 का आंसर क्या होगा आपका? Yes, but for sovereign gold bond, the bond is issued for how many years? For sovereign gold bond, the bond is issued for how many years? वो भी बता दो. Hello. For sovereign gold bond, a bond is issued for how many years? Yes, 8 years. But a premature redemption can be done only after the start of 5 years. So you cannot do anything before 5 years. You can do it only after 5 years. Okay. And the rate of interest mentioned by Ashutosh is correct. It's 2.5%. And what are the tax implications? Do you have to pay tax on the interest or on the capital appreciation? Tell me. Do you have to pay the interest? Yes or no? Do you have to pay the tax? Sorry. Do you have to pay the tax? Yes, no tax, and this is what you have to remember. Therefore, many people invest in your sovereign gold bond schemes. So answer will be C. Next question. What is the maximum limit for sovereign gold bonds that a subscriber to buy and in an individual fiscal year? 1 kilogram, 2 kilogram, 3 kilogram or 4 kilogram, and this is the maximum limit. Good. I'm able to see your answers. Good. Good. Tax on interest and no capital gain. That's also correct. 87. Yes, we all know, and this is a very famous question which will be asked from sovereign gold bond if they are willing to ask it. What is the maximum limit? We all know that it is 4 kgs, 20 kgs for trust. Okay. Question number 88. Gold monetization scheme. Under gold monetization scheme, you can deposit the gold with the bank and bank will pay you the interest. Okay. But under sovereign gold bond scheme, you purchases the bond from the government of India and you keep it. So this is the basic difference. So tell me, what is the following banks, which of the following bank is not allowed to implement gold monetization scheme? Which bank cannot perform a gold monetization scheme? बताइए. Which bank cannot take part in the gold monetization? Asked in phase 1. Yes, RRBs are not allowed to take part in the gold monetization scheme. And yes, what is the interest? Chalo, interest I will ask you later. Or chalo, let me know what is the interest which a bank will pay in the short term deposit of the gold monetization scheme. What is the interest which a bank will pay on the short term gold deposit if anyone is making a deposit of 2 years or of 2 months? What will be the interest which will be offered? Till then, try to answer this question also. Question number 89. Minimum amount of gold that has to be deposited under gold monetization scheme is what? Nilesh is saying 0. Yes, very good, Satyam. In short term, it is decided by bank. Okay, in long term and in your medium term, you have a fixed rate of interest which you have to pay. It is 2.25 and 2.5% if I am not wrong. Okay. Now try to answer question number 89. Decided by bank was correct. Okay. The minimum amount of gold which a person can deposit is 10 gram. And what is the maximum limit? What is the maximum limit? Yes, as per its policy, that is also correct. Question number 89. Come on, I am waiting for your answers. Maximum amount which can be deposited can be. Maximum amount कितना हो सकता है? Maximum amount. Maximum amount can be no limit. Good. चलिए, so 89 भी हो गया. The last question of our today's marathon. Question number 90. What is the duration range of short-term deposit under the gold monetization scheme? Question number 90. 90 का आंसर प्लीज. What is the duration range for a short-term bank deposit under gold monetization scheme? No maximum limit. Yes, correct. Shruti, Ashutosh and Nikhil. And guys, please clear the exam. You all are selected for phase 2, so make it. Ashutosh is going with A, 6 months to 1 year. Okay. Nilesh is going with D. Nikhil is going with D. Amit is going with 3 to 5. The correct answer will be D. Short term is somewhere from 1 to 3 year. Okay. 1 to 3 year will be your short term. But for medium and long term, medium is 5 to 7 and long term is 12 to 15 years. Okay. So this is what you have to remember. The right answer over here will be option number D. Okay. So all the very best, my friends. That concludes our marathon for banking, capital and bullion market. Okay. I hope you enjoyed it. If you enjoyed it, then please comment in the comment box of this particular video. You can also share your feedback on hello@edutap.co.in. Thank you very much. Now I will just wait for 2 to 3 minutes for any doubts. Otherwise, let's move ahead to continue our day. Let's complete all the pending work. Okay. Tomorrow you have a marathon related to pension and your insurance, which will be taken by Jaskaran sir. Okay. Chaliye, all the very best. Do well. If there are no doubts, then I will conclude my session and even I will complete my work. And all the very best again. IFSCA. I have heard that many people are not appearing for IFSCA. So those who are appearing, you have a very good chance because competition is less. Try to make sure that you give your best shot in the IFSCA exam too. Sir, how we can cover spot and precious derivative market for precious metal? For that, first understand the website of MCX and the website of NCDX. MCX की website पे जाके भी you can read, and on NCDX थोड़ा बहुत you can read, and just see different types of commodities, what is traded in India, what is traded on MCX. That is enough. Okay. So one should do how many month of circulars? This doubt you should ask to Kritika ma'am because she is covering that domain, right? I do not want to comment on this, but at least 3 months is needed because these were in current affairs, right? So at least 3 months is good to go. Cool. On that note, let's end the session now. Bye bye. Take care and have a good day. I hope you all will clear IFSCA Grade A exam with good number of marks. Take care. Bye bye and have a good day ahead.